All right, if I had learned this 4 years back or 5 years back, I would have been a pro gold trader. Now, gold is actually one of those assets that every single forex trader wants to currently be trading. In this video, I'll teach you guys how to trade gold like a pro. Fundamental analysis to look out for, key levels to watch out for, gold behavior, risk management, pro tips, so on and so forth. All right. Now, this is the gold chart. Of course, when you come to the gold chart, we all know when it comes to market key levels, you want to first move to your weekly, right? Then you check the first three candles, 1, 2, 3. Now, with the first three candles, you can easily deduce the movement of the market. If the market will be heading to the upside, or if the market will be heading where? To the downside. Now, before we dive into the technical aspect of gold, you need to understand some of the histories of gold. Now, these informations are beginner friendly and it will help you navigate your way around gold, because every single gold trader that does not understand the basic history of gold, you're a beginner gold trader and you're just gambling. All right, now let's move to this part. Let's start with safe haven assets. Now, safe haven assets is divided into two. All right, we have safe haven assets, then we have some assets that can also be considered as safe haven also. But the main safe haven asset that everybody know is actually what? Gold, JPY, CHF, and sometimes USD. Mind you, all this information I'm giving you guys in this video are informations that I've gathered all through my years of trading. Remember, these informations are not fundamental advice. These informations are not technical advice. This is a disclaimer. So if you want to pay attention to all the information I'll be giving, these are information that I use to trade the forex market. You can study them, backtest them, learn about them, and see if they work out for you. All right? Now, firstly, you need to understand that gold is a safe haven asset. Now, what is a safe haven asset? Now, safe haven asset can be seen as what? As security. What do I mean by security? Investors run to those assets when they want to save money, when they want to preserve their value, when they want to protect their purchasing power. What do I mean by purchasing power? Today you have $1,000. 10 years from now, you still want that $1,000 to be able to afford things that will be sold after 10 years from now. You convert your money to gold. Now, that way, you're not taking risks because you're not looking for profits. You're actually protecting what? Your capital. Do you understand? And by protecting your capital, it will end up retaining what? Its purchasing power. Gold. Now, you know that gold is a safe haven asset, right? We have JPY, which is the Japanese yen, the Swiss franc, CHF, and the USD. Now, that is one of the most important things you need to understand. Now, secondly, you need to understand the relationship between AUD and what? And gold. Now, Australia imports and exports a lot of gold. So most times when you notice AUD is strong, gold is also strong. Now, this only happens when there's no global challenges. This only happens when there's no global economic factor that is affecting the world. Do you understand? In a situation where there's panic, there's fear, there's anxiety, there's uncertainty, what will investors do? They'll convert their money to gold, and gold will be very volatile. Remember, AUD is Australian dollar. That is the currency of an economy. You don't expect it to be volatile as gold. Do you understand? But when there's no global economic factor, when there's no global challenges, when there's no issue affecting the world, gold and Australian dollar move the same. Currently, if I head to the chart, you'll notice AUD is selling and gold is also selling. I sent it to my Telegram channel. If you're currently my Telegram channel, check the daily outlook I posted today. I explained every single information of what is going on and why AUD and gold is selling together. But when there's a global economic factor, you hear that Russia is attacking this, USA is doing this one is doing this, two countries are colliding. of course, investors in those countries will run to where? They will run to gold. And when they run to gold, AUD and gold will not move the same. But in situation where, please remember, in situation where there's no global challenges, there's no global crisis, if AUD is buying, gold is buying. If AUD is selling, gold is also what? Gold is also selling. Take note. Now, AUD also usually strengthens when the Chinese economy, which is CNY, when the Chinese economy is also very good, because Australia and China are very good trade partners. So whenever it's good in China, it's also good in Australia. Do you understand? Just remember that they are trade partners. So if things are going well in China, likely things are also going well. Where? In Australia. So whenever you notice the China economy is booming, that's when you see Australian dollar pumping aggressively to the upside. Now, another relationship you need to pay attention to is NZD, which is the New Zealand dollar. Now, if the New Zealand dollar is pumping, AUD USD will also be pumping. And if there's no global economic factor or there's no global crisis, gold will also what? Be pumping. Do you understand? So these are fundamental and basic history you need to understand when it comes to gold. Another information you want to pay attention to when it comes to trading gold: key news events that are very important: interest rate data, CPI, PPI, NFP, FOMC. Now, all these news events affect the dollar. Do you understand? All these news events affect what? They affect the dollar. So once they affect the dollar, of course, remember, when there is fear, when there's panic, where will investors run to? They'll run to gold and other safe haven currencies like the JPY, CHF, or USD. That is, if USA is not directly or indirectly involved in the conflict. Please take notes. This is very, very important. All right. Now, another information you want to pay attention is what? The risk management. After this, then we head to the charts. Another information you want to pay attention is what? The risk management. Now, when it comes to trading gold, if you notice, I just laughed. A lot of you don't like trading gold with stop loss. If you don't trade gold with stop loss, chances of you blowing your account is higher than someone who trades gold with stop loss. Always make sure you're using what? You're using stop loss. Always make sure you're not risking more than 1 to 2% of your account size. Remember, gold is very volatile. So immediately you're going into gold, so long as you're not looking to lose the amount you have in your account, please risk accordingly. Have a risk threshold. Don't buy gold because you see Tony Sniper telling you to buy gold. All of a sudden, on the $100 account, you use one lot. You will blow your account. Don't sell gold because Tony Sniper says sell gold. You use 2 lots. Now, Tony Sniper's account might be 10,000, might be 20,000. Your account is $100. So if you use the same lot size, you'll end up losing your account. Always make sure you use the adequate lot size when trading gold. Always respect risk management. You have no business using even 0.1 on a $100 account. That is very risky because 100 pips your account will blow. And what is 100 pips? Just from 33,500 to 3360. You've blown your account. Just 10 added. So please and please take note of that. All right. Then another key things that are very important when it comes to trading gold is actually what? Is actually supply and demand, or COT. Now, COT can help you to see where traders are positioned, how many people are buying, how many people are selling. All my students, both physical and online, they understand how to use COT like a pro. If you don't understand how to use COT like a pro, don't miss my upcoming mentorship. Payment is currently ongoing. Tap the link in the description or in the comment to join my Telegram and go lock in your spots. All right. Now, COT helps you to know how traders are positioned. How many people are looking to sell these assets this week? How many people are looking to buy this asset this week? Then fundamental analysis or fundamental news event like CPI, PPI, interest rates, FOMC, NFP, they influence and affect the direction of gold. Now, let's move into the charts. You can currently check gold now. This is, let's go to the 15 minutes time frame. If you go to the 15 minutes time frame, what can you see? You can see gold selling aggressively. Now let's check AUD/USD. What's AUD/USD also doing? Selling aggressively. Now, why are both of them selling at the moment? Because at this point, dollar gained a little bit of strength due to the confidence individuals are having in Trump wanting to resolve the ongoing issue between who? Between Russia and Ukraine. If Donald Trump is able to resolve that issue, I promise you, dollar is going to have a huge spike to the upside. Do you understand? It might be short term, but of course, the market is definitely going to feel it. All right. Secondly, you always want to pay attention to information that you see here on your trading view, especially for those of you that don't know where to get fundamental news data from. You always want to pay attention to where? To information you see here on your trading view, because they'll also help you. Now, this is a basic class for how to trade gold like a pro. Moving forward, I'll create videos like how to trade gold on smaller time frame, how to trade gold on higher time frame, entries and exits. This is what we're going to be looking forward to. But for the sake of today, I'm just teaching you guys the basic history of gold. Number one, how to draw your support and resistance on gold. Number two, my students already know how to draw your supply and demand on gold, how to use COT on gold, and how fundamental news events influence what? The movement of gold. Now, let's move to. Now, if you head to the weekly time frame, what's the first thing we see? Look at the first news, right? Now, if you look at the candle, now from these three candles, what can you see here? You actually notice that the market really wanted to start. Then all of a sudden, what happened? The market was resisted at this point. Then the market started dropping. Now, remember, on your weekly time frame, you only just interpret what the candles are telling you. You don't do much. Then you move to your daily. Now, when you move to your daily time frame, remember, when it comes to trading gold, weeks are very important. When it comes to trading gold, weeks are very, very important, because if you understand what these weeks are trying to tell you, you can easily say gold is about to move from point A to point B, so long as liquidity has been cleared. Please take notes. All right. Now we're currently in our daily time frame, and we can currently see that that we've already highlighted this level and this level. Clearly, you can see it on your daily time frame that the market wanted to start pushing, then the market started facing a little bit of resistance. Now, in my market structure video, I talked about continuation and reversal. I talked about exhaustion and and reversal also. Now, pay attention. There are some exhaustion that leads to a continuation, and there are some exhaustion that leads to a reversal. Now, an example of this exhaustion is an exhaustion that leads to a reversal, because at this point, gold actually started showing exhaustion here, then the market reversed back down. Now, in situation where this market starts reversing back down, where do you want to pay attention to look to buy gold on your daily time frame? Is here, right? Because this is where the buy started from. This is where the buy started from. Then the market came back to test this buy. Now the market is coming back the second time. All right, coming back the third time. Sorry. Then you move to your 4-hour time frame. Now, when you move to your 4-hour time frame, what would you be looking forward to do? You'll be looking forward to buy the market if the market comes into this zone here. You can clearly see that this market is very bearish. Of course, there was a liquidity that was created here. The market went up, cleared the liquidity, dropped back down, went back here, gave us a form of like head and shoulder. Do you understand? This is the left, this is the right, and a drop. All these are basic information. Now, what should you be expecting? A drop into this zone, so the market will clear the liquidity that was created here. Then if the market should drop into this zone here, we want to see how the market will react. Then we'll either look for a push to the upside, maybe because of a fundamental news that came out and it was actually bad for the dollar, maybe made the dollar weak or brought in fear into the markets. Then we look to buy gold. Or a CPI news came out and we noticed that the CPI data is actually going over the roof, just like the PPI that recently came out. Or a miscellaneous event comes out and all of a sudden we notice fear and panic is back into the market. What would happen? Gold will pump aggressively. So make sure you watch this video, make sure you understand this video. The next video I'll be creating is how to trade gold on lower time frame how to trade gold on higher time frame, and entry and exit for gold market. I remain Okwanto Uche, also known as Tony Sniper. Peace.